Hey traders, welcome back to this video. We're talking about trading plans. Previous couple of videos we talked about broader goals, and then we talked about how to start to define our trading plan and strategy using some analogies from owning a business, a bricks and mortar business, a pizza shop, a restaurant, and a car dealership. So kind of using that analogy to work out for trading, because it's very easy sometimes to kind of dive into trading and think, well, I can just dive into it. I can just start to buy and sell stock, buy and sell currencies. But without the plan, then you're going to struggle to make anything about it. So let's dig into it a little bit more depth now and go right into each component. So the first component we've got is the what. So let's start to put these on here. So the what. So the what is what am I going to trade? In other words, what markets will I trade? Will I trade US stocks? Will I trade US indices? Will I trade currencies? Will I trade options? Will I trade commodities? Do I want to become a gold and silver specialist? A crude oil, natural gas specialist? Softs? You get the idea. You have to kind of nail down exactly the market that you want to trade. Okay, now this is going to depend very much on what hours you can commit to it. There's no point in saying I want to trade the FTSE open or the DAX open at 8 a.m. if you've got to do a school run or if you've got to work at 8:30 in the morning. It doesn't make any sense. So you're going to have to kind of plan this, and we talked about this before in other videos of kind of fitting things around your lifestyle. So we're not going to go too much into that now, but this is the what. So you're really nailing down specifically. So that's okay. Let's say that might be, I want to trade the DAX, the FTSE, and I also want to trade US dollar yen, and I want to trade euro US dollar. All right. Now you're going to have reasons behind that. You're not just picking them out. That may be because you feel that there's something going on in Japan which is going to give you some volatility there, or maybe it's quiet and that's a strategy that suits you. You might say the DAX and the FTSE because it's European hours and I want to keep European hours and I want to keep my evenings free, whatever it may be. But the point is, the what is what am I trading? The exact markets I am trading, and I'm really getting focused with that. You can adjust the plan later. This is the important thing to note, guys, is that it's fine to have a plan that you adjust several times, but what you need to do is at least start with something. And you'll have in your head now, you'll be thinking now, listen, I like trading euro, I like trading yen, I like trading pound, whatever it may be. So that's going to be my starting point. I also want to add in perhaps some tech stocks, whatever. The point is, start with something, get the plan, get it all written down, cement it, then you have periods where you can adjust it. So let's move on. Let's look at the next one, which is the when. Now the when is what times you are going to trade. Now obviously from a day trading perspective, that's very strict and focused. It's a case of, hey, I want to trade the closing hour in the Dow, so 8 o'clock to 9 o'clock UK time, or I want to trade the opening hour, or I want to trade the lunchtime, or whatever it may be. That's very specific and makes a lot of sense. Don't forget also to go into depth in terms of the day. From a day trading perspective, you want to trade it. Maybe you're not very good at trading Mondays. Maybe Mondays are too quiet for you. Maybe Fridays are a bit too volatile. Maybe it's again around the lifestyle that you've got and how you can implement it. So perhaps you're going to say, hey, I want to trade the DAX and the FTSE, the yen, euro, US dollar, and trade the DAX and the FTSE on the opening Monday, Tuesday, Wednesdays. And I'm going to swing trade the US dollar, JPY, euro, US dollar, and I can focus scanning for strategies all throughout the day because I'm going to leave a scanning tool in and I'm going to take this specific setup. So that's fine. Swing trading, you might say, okay, hey, I'm going to scan for things that I like. I'm going to rip through charts at 5 p.m. all the UK shares at the end of the closing day. I'm going to rip through and see if there's any setups I like for the next day. If there's setups I like, I'm going to put those orders in for the open for the next day. So I'm allocating 5 o'clock till 7 o'clock each evening to do my scan, apart from Friday evening, which may be Sunday. Again, got to get specific with it. Don't give yourself too many, don't leave the boundaries open, tighten them up. And day, again, you can say, listen, I'm not going to do any scanning on Friday and also Monday because I want to wait until the middle of the week. Whatever. Again, it's down to your personality, your style, your strategy. So you get the point there. When is the time of day? Where's my red pen gone? Here it is. The time of day and the actual day. And then even stuff like going further into it and going into season. Right? That may sound crazy and silly, but it isn't. Summer is notoriously quiet, not all the time, but generally over history, it's quiet. Same coming up to Christmas. Sometimes you'll get a Christmas rally and then it kind of dies off over Christmas. Anytime, generally speaking, this is very generally and broad, is that when the kids are off on holiday, the markets tend to be a little bit quieter because for obvious reasons, various different people in funds and in places that are moving money are on holiday. You know, there's always somebody away or people away, and stuff doesn't get done as much as it does when everyone's there. It makes sense, right? So you might say to yourself, listen, I don't want to trade at all between June and August because it's quiet, or I don't want to trade at all between this and that. I only want to focus. Again, you know, I could go on and on about it, but the point is you start here and you start narrowing, you know, you're narrowing until you get to a point where you come out with a little kernel of a plan that you can plant and grow from. And if it doesn't work, you kind of adjust it. So what's the next thing we're looking at here, guys? The next thing is the how. Which pen are we going to use now? We're going to use the black one, which I put in my pocket. I put them in different pockets to keep myself on my toes. All right, so this one is the how. So this one's strategy. Okay, so we're not going to go into depth about strategy. We've talked about strategy before. Go and check out some of the other videos about that, about developing a strategy. But this is the kind of thing where we go, listen, as we alluded to earlier, I'm going to trade the open, I'm going to trade the DAX, the FTSE, on currencies. I'm going to trade these momentum strategy only, and I have a strategy for that. So the point is, if you can imagine that, you know, each one of these pens is a strategy. So you've got your trading plan here, and you've got to work with me on this one, guys. Okay, these are your two strategies that you've got, and maybe you've got more. Let's say you've got 3 or 4 strategies. I knew I bought loads of pens for a reason. You got 4 strategies, okay? And at this point, you're saying, right, these are all individual strategies in their own right. This is a pen in its own right. This is a strategy in its own right. This is a momentum trading strategy. This is a mean reversion strategy. This is a pair trading strategy. You know, this is a strategy based on stochastics, okay? For example. So you say, listen, I'm going to use this strategy and this strategy in with this plan. These are separate and can be worked on separately. You can bring in additional strategies or take strategies away, but they sit on their own right. So they're profitable, you've back tested them or you've run them or whatever it may be, and you know that this strategy is good to use in certain conditions. So these are like weapons that you have in your arsenal that you bring out. They're not part of the plan as such. You don't start tweaking strategies. You tweak strategies on their own merits and then bring them into your trading plan. Okay, this is broad, this is going very granular. So I hope that makes sense, by the way, guys. So this is kind of what you're doing now. So what strategy are you going to employ? I'm going to employ mean reversion, I'm going to employ momentum, and I'm going to employ a pair trading strategy across stocks, for example. And you already know what you're going to be trading, when you're going to be trading it, and the strategy you're going to employ. And so now we're starting to get a little bit narrower, aren't we? So let's move on now to the other section we've got here is risk and restrictions. Now, what do I mean by risk and restrictions? We'll talk about risk in a moment and go a bit more detail. But restrictions is again giving yourself, pulling the boundaries in. Now, I'll talk a lot about boundaries, and just a quick note on this, guys, is that at the end of the day, you can trade anything you want. Yeah, any size you want, any time you want, any market you want, and that is not good. It seems like it's good, and you get all the people saying this, and you can trade whatever you want when you want. That is fine, but the trouble is you go from there to there to there to there, to swing trading, to day trading, to big size, to small size, high frequency, low frequency, stocks, this, that, the other. It doesn't make any sense. You're just all over the place. Let's use the analogy back of the business owner. 1 minute he's selling pizzas, high-end pizzas and stuff to office lunches. Next thing he's trying to sell kids lunches to people with families at the weekend. Next thing he's trying to do high dining. Next thing he's trying to do takeaway burgers. Next thing he's trying to do dessert bars. Next thing he's trying to do ice creams. Next thing he's trying to do deliveries. You get the point. Same with the cars. He's trying to do £1,000 runabouts. He's trying to do £50,000 sports cars. He's trying to sell You get the idea. And it's the same with trading. As you specialize and go, hey, the boundaries are massive, but as I start to bring them in, then things get a bit clearer. Not to say you can't jump around, but getting that clarity. So the restrictions. So let's move on. So the restrictions I'm talking about are what times you're going to trade, any times you're not going to trade. So this might be broad and say, hey, I want to trade this time of day. Is there a specific time you don't want to trade? Say, listen, I don't want to trade between 12 o'clock and 1 o'clock because I know that it's very, very quiet and it's not suitable for my momentum strategy. What else could you have? It could be, and also this could be strategy level or it could be global level. So as we talked about, each individual pen was a strategy on its own right. You may have in that strategy that says this strategy works, but it doesn't really work at the open because it's based on mean reversion, and generally at the open we have momentum based movement, just for argument's sake. So that is a strategy level restriction. If you then go back and say, hey, my whole trading plan at the global level, my restriction is I don't trade on a Friday afternoon because I am no good at trading on a Friday afternoon. It's not strategy level. It's not dependent on the strategy. It's dependent on the actual whole global, trading plan as a whole. So those are the main things. The next one is the most important one, is the risk. I'm going to go into that in a lot more depth in the next video. So if you like this, give it a thumbs up. Don't forget to subscribe for more stuff like this in the future from me. Any comments? Would love to hear what you have to say about trading plan, how to construct your trading plan, what goes into your trading plan as well, what you think I've missed out here. But the next video, we're going to talk a lot about risk because that is so crucial to trading success. See you there, guys.